All right, let me welcome in Mr. Shankar Raman, Whole-time Director and Chief Financial Officer at L&T, who's joining us this morning. Mr. Shankar Raman, great to have you on a day when we're celebrating our 12-year anniversary. And, the theme really being the power of resilience. And that's what I wanted to kick off this conversation with today and get your perspective as well. Given how resilient the industry has been, the sector, your own company has been at a time like this and through the pandemic, through the crisis that we've seen, and continue to really maneuver our way out of. Talk to us about how resilience has played a role in withstanding the toughest of times.
Good morning. First and foremost, my heartiest congratulations for ET Now to have completed 12 years. It's no mean feat, and my best wishes for your continued success. When it comes to resilience, I think it's basically an expression of character. I think it's an attitude, it's a mindset. And we've been tested adequately by both the economic cycles, the aspiration of the country to break free and become a large developed economy, and our own aspiration for better lifestyle and better comfort. All of this put together finds its way as objectives, some commercial, some social, in different parts of the country. And we represent an organization which actually seeks to build good quality infrastructure for the people to live and operate in the country. This has never been easy because creating assets in public space calls for tremendous amount of grit, foresight, commitment, and endurance. Now, all of this in a way packages itself into the resilience that you're talking about. The recent pandemic has not made things easy. We never know whether we are done with it yet, because as we sort of lock out and unlock, there's again a fear of something coming back again. So all that we can do is stay safe and get ourselves vaccinated and observe all safety protocols. But having said that, the way the company has been looking at all of this is an opportunity for us to build India. To, in some sense, rebuild India, because I think over the last 60, 70 years, the country has moved in a certain direction. The next 20, 30, 40 years looks very exciting because as the new generation takes over the reins of the country in terms of its economic fortunes and social fortunes, there's an opportunity for us to recreate. And we always believe in our company that construction happens on the back of a destruction. We need to destroy something to construct something. But except that, the destruction has to be very responsible. There is a tremendous amount of conversation around the globe for creating a very sustainable planet. I think the growth all around, developed economies, underdeveloped economies, developing economies, all of us have in a way contributed to the pollution levels in the world, and it is our responsibility, collective responsibility, to make sure that we in some way clean up the mess that the development processes have created and leave the world a better place for the next lot of people to kick in and operate. So the move towards ESG, the move towards sustainability in business, in practices, in processes, etc., is all adding up in a way to the resilience and the sustainability that you're talking
about. Okay, there does seem to be a sense of capex revival that's looming across the industry. Do you see or sense that optimism at this point with regards to the economic recovery, to things coming back on track? What are some of the plans that you see unfolding? The government's talked really big on infrastructure, for example. Do you see that spending kick in? Are you as optimistic on the revival?
I think we are looking at it at a time when things are low, chips are down. So I think the only way to look ahead now is to look forward and move north. There is a definite potential for the country to kick ahead with the plans for investment in infrastructure, because that's very fundamental. to the economic operations and the industrial operations and the commercial operations of the country. The budget that got announced by the government before the second wave broke in placed considerable emphasis on investments in creating this infrastructure. And it is also a very sensible thing to approach growth because it creates employment, creates multiplier effect. So consequently, I think capital expenditure is an integral part of this entire journey of investing in better facilities and better infrastructure. We do believe that the government programs would have their place in the pole position because I think their ability to kickstart the entire investment cycle is that much better. It's also enabled because a lot of multilateral funding are available for supporting good, credible programs. So consequently, I would expect that the government program to get going. Hopefully, with the vaccination improving and the second wave sort of receding, assuming that all of us stay responsible, I do see the second part of the quarter that we are stepping into, that is the July-September quarter. Onwards, I would expect to see momentum return back. We are, as a company, preparing ourselves to meet that opportunity. We're preparing our bids to be submitted. As we speak, while the ordering momentum has slowed down from April to date, but we expect that recovery to sort of come back. It pretty much happened the same way last year. Last year, if you remember, it was year of two halves, right? The first half was very subdued, uncertain times, and second half meant that we recovered faster than what we anticipated. Having lived through one wave of this, I think we should be better prepared to take advantage of the revival that could happen in the second half of the second quarter of the current year onwards. As far as CAPEX, I think the PSUs and the government-sponsored programs like the high-speed rail, dedicated freight corridor, and the general infrastructure programs that we talk about in terms of metro, in terms of water, in terms of power distribution, etc., would continue because they are inherent part of the government infrastructure build plan and also part of the 10IP. As far as private sector capex is concerned, I think it would be in patches. I would think. Because the investments that's happening around the EV space is quite interesting. With the revival of the metals prices, the investments around the metals sector and the mining sector is also pretty interesting. India is becoming a fairly recognized powerhouse for back-end processing and data storage and retrieval. So I think I see a lot of opportunities in the area of data centers being built. With all the freight corridors getting built, I think there's a great opportunity for logistics infrastructure to play out in India. So I would expect that also to come in, and most of this could come from private sector. And finally, the healthcare sector. I think the pandemic has sort of exposed how inadequately prepared we are for a large-scale healthcare delivery system. So I would expect that the healthcare sector, particularly the private sector, to look at the opportunities that are available as India seeks to have a better coverage of healthcare, to invest in hospitals and facilities. Real estate sector has been very subdued over the past couple of years. The commercial real estate particularly, given the fact that the last 18 months has seen people work from home, etc., the entire question around viability of large office spaces have come up for discussion. But we'll have to wait and watch as to how much of work from home is going to be the norm and how much of it is going to be hybrid. I do believe that there will be definitely a certain amount of demand returning to commercial real estate. As far as residential real estate is concerned, I think by and large, India's middle class can only afford affordable homes. So to that extent, the momentum that was there for high-end residential apartments have sort of receded. And I would expect that to continue for some more time. I think a lot of Indians are still seeking to buy their first homes. So I do see a lot of affordable real estate development happening. So in a way, private sector will have its role to play. but I guess it will follow the PSU and the government expenditure rollout.
Mr. Shankar Raman, you gave us a very good flavor on most sectors where you actually do see signs of a recovery and where there are interesting things building up. Quite interesting, those are observations of yours. But tell me, going forward, purely when it comes to L&T and businesses that you're in, what do you think needs to be done when it comes to alleviating bottlenecks, procurement of clearances, land acquisition, overdrawn litigations, and more importantly, do they continue to be a hurdle, or do you think things have eased a lot more than they were before?
The conversation around this has been consistent over last several years. So to that extent, I think the awareness of the government and the awareness of the bureaucracy about facilitating some of these bottlenecks to be removed is pretty high. I don't think there is a topic that the government or the bureaucracy is not aware of. I think what we are struggling with generally as we build, in public spaces is that there are opinion groups, and generally the government tends to go with some sense of consensus, and that in a way becomes a bit of a time hemorrhage. And in any project, as you know, if you don't execute a project in time, you incur additional cost. And we can, as a poor country, ill afford a higher cost of infrastructure. There are reports that you would have yourself seen that the cost of infrastructure in India is higher by at least 20 to 25%, sheerly because of delay. And what we have been constantly maintaining as a company is, while we recognize that 100% of all clearances may not be possible as we are awarded a project, there has to be a minimum threshold of clearances and approvals that should be obtained. And ideally, I think we should try to create as little windows as is possible for the execution to go running from pillar to post. Today, it is a reality that we have to seek approvals from different quarters of the government. So if there is an effort made to consolidate these and manage it at a program level, I think not only will it attract better participation from the contracting community, but will also invite better funding support because of the ease at which things are being done. We have improved. If you look at the last 10, 15 years, I think things have gotten better. But are we the best in class today? No. I think there are examples around us. May not be everything is not in a kind of democratic setup that we run in India. But the fact is, I think the commitment to execute project within time, within cost, if that intent is well internalized in the government, and the government is the concerned departments and the ministries are also incentivized to keep the cost within control, within their plans, and keep, more importantly, the time within schedule is very important. Today, the time hemorrhage is completely borne by the contracting world, which according to me is not sustainable. I think there are a few companies like Larsen and Toubro who are large enough to be able to withstand some of these and move forward. But the country's requirements cannot be met by one L&T. There has to be many companies which should sort of pitch in. And this is possible only if their balance sheet strength is not tested time and again by cost overruns. And secondly, our own dispute reconciliation settlement systems needs to get far more efficient. We are losing a lot of time in trying to address the grievances which arise out of time overrun and hence cost overrun. I think our dispute settlement mechanism has to be quick and efficient. And this should fit within the overall context of what I'm saying of doing things in time. If something has to be done today, we should target to do it as of yesterday. And this mindset transition is something that is very important if things were to do well than what they are today. But today we are work in progress as far as this is concerned.
Morning, Sir Nikunj Dalmia also joining in. Thank you for being part of our anniversary celebrations. I mean, you've been a well-wisher of the channel. I always say that there could be cyclicality in every business, but there's one relationship which we forged, and that's our relationship with L&T. That has only gone higher and higher. So we are very proud of this association.
Thank you very much. And a pleasure has been ours as well. And our best wishes for your continued success.
Right. But I have one follow-up question. And this question is perhaps about how exactly do you think at state level the challenges will now be overcome? At state level also, there are challenges which have happened because of the second wave, both in terms of receivables and the budgets. State governments have become an important part of everyone's portfolio, and especially for L&T's portfolio. Do you see that as the blind spot?
It's a continuous exercise. I think pandemic or no pandemic, I think state governments always have conflicting demand on their limited resources. So we've, as a company, since we are dependent a lot on some of these programs, we have been trying to focus on programs which are funded by multilateral agencies. More than 45-50% of our programs that we work on the state governments are funded by funding agencies. And this is a good insulation because the funding agencies are an additional layer of close monitoring of the project. And they work very closely with the government to make sure that the project progresses well, because they've committed funds to complete the project, and they would like to complete the project and start getting returns and return of capital. So to that extent, I think there is a momentum that is available. So in such cases, what we have to deal with is only the approvals and the clearances and certification for work done, rather than wait to collect the money directly from the government windows. There are obviously projects which are run out of state budgets, and that is where we have to possibly keep working in very, very close coordination with government. One good part, if I can call that, is this money never really stay unpaid. We obviously would like the money to come much faster in line with the contractual conditions. So there is a delay that creeps up in some of these payments, but that's part of the entire architecture of working with the state government. So when we bid for projects, we do try to factor in the kind of 100 days it takes after you raise the invoice to get your money back. If the government were to realize that if they were to tune up their machineries to pay, let's say, in 60 days instead of 100 days, they will get the cost of infrastructure down. And minute you get the cost of infrastructure down, you get so many ancillary benefits that kick in. Industries come to set up in places where infrastructure is developed better. The commerce thrives there. The quality of urban living improves. The city development plans kickstart on the back of it. So there is so much of a ripple effect that when you have a project which is the motherboard gets done well. So I think state governments, hopefully, at least the finance departments of the state governments will hopefully be able to see the economic rationale in trying to keep the cycle, cash flow cycle going. But having said that, I think our experience has been a child which cries the most gets the milk. There are multiple claimants. So we need to figure out a way as to how we constantly stand ahead in the queue insofar as our payments are concerned. But I think it's, once again, like many other things with the government, a much discussed topic, much discussed issue. They're well aware of this as a constraint. And I hope we will be able to get to better times. But one important concern when it comes to state governments is every 5 years, when you have a change in the party which comes to power, there often is a risk of some of the programs, even if they are midway, to be reviewed. And that's a major concern that India should have. because we cannot have political ideology come in the way of economic development. I think the common denominator should be people's welfare. The common denominator should be country's welfare. So to review programs sanctioned by the earlier government and hence cause delays and sometimes even rupture the scope of the project is a big unfortunate risk that we often see whenever there is a state election. And that is something that my appeal would be for the governments to look beyond the political angle when it comes to continuation of some of these projects which are work in progress.
Just to wrap it up with one final question. 12 years ago, ET Now started. That time there was one L&T. 12 years henceforth, your NBFCs listed, 2 IT companies are listed. I will not talk about next 12 years, but next 2 years. Any other subsidiaries which you think could be ripe for you to go take them public?
Next 2 years, or why even the next 5 years, our intention is to return better value to shareholders. Now, anything that we do in the next 2 to 5 years would be with this as a baseline. I do not think that there is an opportunity for any of our other subsidiaries to get into listed space in the next couple of years that you cited. But we would like to possibly consolidate the value that we are generating in all the 4 listed entities we run in our group and make sure that we become far more profitable and valuable than what we are today.
Well, really appreciate your time, Mr. Shankar Raman. Stay safe and certainly hope to see much more of you going forward.
Thank you very much and all the best to all of you and stay safe.